Hey everyone, Supermicrocomputer is one of those AI companies that's been thriving ever since enterprises really started to boost spending to develop generative AI, large language models, etc. It started the year on my buy list and I since removed it and I lowered it to a hold. So I've been getting a lot of questions asking, where is Supermicrocomputer stock now? Is it still a hold? Do you think it's a buy? So I'm going to address Supermicrocomputer stock in this video. I'm going to update my buy recommendation for Supermicrocomputer stock since it's been a little while since I last updated it. So let's take a look at this interesting AI stock. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. All right, so I highlighted that Supermicrocomputer stock started off the year on my buy rating list around, I would say mid-January. I placed it on my buy recommendation list. And then the stock price absolutely soared as a result of the rising effectiveness of AI and the AI stock frenzy. I took it off my list around $1,100 per share. I recommended it as a hold ever since then. So you'll notice here Supermicrocomputer stock hold. I last updated this recommendation on May 1st. So I took it off. I said it was a good time for investors to take profits. After all, the stock price had absolutely soared to start the year. Now, the company is doing very nicely in terms of revenue growth. It's exploding, actually, 11.82 billion in revenue, triple digits in revenue growth for several quarters now. That's up from less than 4 billion in trailing 12-month revenue in 2022. Sales growth has been absolutely phenomenal for Supermicrocomputer. The trouble I've had with Supermicrocomputer and what makes it different than NVIDIA is the profitability and the cash flow. Supermicrocomputer's operating profit margin is not very high at 9.72%. Now, this is an industry-wide phenomenon. Companies like Dell Technologies and Hewlett-Packard Enterprises that service a similar market opportunity also have relatively low operating profit margins here in the high single digits and mid single digits. So it's not a profitable industry to be in. And this is the highest its operating profit margin roughly has been in the last decade. So this 9.72% is not like a temporary low or anything like that. This is actually a temporary high for Supermicrocomputer stock. As a result of those exploding revenue figures, the profit margin has also increased. I think this is the highest point, or roughly around the highest point it'll be. It might go up a couple of more percentage points, but it's not going to jump to 20 or 30% or anything like that. That's very unlikely. Now, the facts are actually worse when you look at its cash flow from operations over a trailing 12-month period. A massive slowdown here, a massive decrease, negative 1.85 billion for Supermicrocomputer cash flow from operations. This happens with companies that are growing revenue this rapidly, especially when that company that's growing revenue rapidly sells mostly physical products, because this company needs to invest and spend the cash to create the inventory, which it then sells. So there's a timing difference between the cash flows. And so that's what creates this negative cash flow from operations. It's not something alarming. It's not something that investors should think, oh, this company is not a profitable company. Cash flows are negative. That's not the case. It's just the fact of the business model. When you experience hyper growth for a relatively stable business over several years, it was relatively stable. Then all of a sudden it hits a hyper growth phase. It tends to have this impact, especially when management is willing to make sales on favorable terms. Management could have said, you know what, we're a little bit strapped for cash, so we're going to need you to pay up front because we're going so negative in cash flow. Our sales are exploding so rapidly. But that would have caused Supermicrocomputer some missed sales, some missed opportunities. So management preferred to say, hey, let's keep our terms friendly for our customers so that way we can secure sales and then we can go out and raise capital and pay for this cash flow that's coming out of the business. And so that's what they did. They did some offerings, some stock sales, and raised some capital from investors so that they can fund this growth opportunity. Nevertheless, this is a fact about its business model. It will experience these kinds of decreases when it goes through this hyper growth. But as customers start to pay it back, this will reverse and it'll turn around, and it should be very positive in cash flow from operations. Probably not in the next quarter, but maybe starting 2 or 3 or 4 quarters from now, when the revenue growth starts to slow down and these accounts receivable start to pay their bills, then Supermicrocomputer's cash flow from operations will rebound. So looking forward, the analysts on Wall Street that are following Supermicrocomputer stock, they forecast it will grow earnings per share by 62% per year for the next 5 years. But the bulk of that increase will happen this year and next year. In the current year, it's expecting 102% earnings per share growth, and then 43% next year, and likely slower over the next couple of years as the bulk of the growth is happening now, and then the growth rate is expected to slow down for Supermicrocomputer over the next few years. It's an initial surge, and then it'll kind of slow down in terms of the rate of growth. The revenue will not decrease, but the rate of growth will decrease. That's the second derivative for Supermicrocomputer is expected to slow down. Now, the stock price is still relatively expensive. It's trading at a forward price to earnings of 22.96. This stock has traded for a forward price to earnings of less than double digits for the last several years. It's only exploded higher in recent quarters on the back of the rising effectiveness of AI and the AI stock frenzy. That's why I downgraded the stock to a hold from a buy. If you've noticed, I didn't downgrade NVIDIA because NVIDIA's stock price has increased, but the valuation, the forward price to earnings for NVIDIA, didn't increase like this because NVIDIA's earnings per share and NVIDIA's cash flow from operations has jumped almost as much as the stock price has jumped. But with Supermicrocomputer, the stock price has jumped, but the earnings and the cash flow have not jumped along the lines with the stock price. The revenue has jumped, but not the earnings and cash flow as much as the stock price. And so that's creating this mismatch. That's what's creating the more expensive valuation on a forward price to earnings basis. And even though it's down a little bit from the highs down to 23, it's still more than 2 times the levels it was at before this AI stock investing boom. So to answer, do I think the stock is a buy, hold, or a sell right now? I would reiterate my recommendation today. I would say the stock is still a hold. I would feel more comfortable recommending Supermicrocomputer stock as a buy in the mid to high double digits. So something in the range of 15, 16 forward price to earnings, in that range. I would feel more comfortable with Supermicrocomputer stock, all else being equal. So that's where I would target for a recommendation, for a buy recommendation. And of course, I'll update you on Supermicrocomputer stock as I have all year long. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.